Hi, Todd. How are you?
I'm good. How are you doing?
I'm good. Hi, everybody. This is Shannon Johnson again. I wanted to grab Todd Baker with Service First Mortgage, a certified mortgage planner. I wanted to talk about a couple topics today that are really important to everybody. One of them is forbearance. And I want Todd to explain the benefits versus the reasons why you wouldn't do it, and really who is it for? Who does it benefit the most? And I think that is, we're getting a lot of phone calls on this. People are very curious about it, a lot of misunderstandings about it. So Todd, will you kind of just take over and really tell us, what does this actually mean?
I sure will. And yes, I know all my realtors I work with are getting calls, and I'm bombarded with calls, and I'm sure most loan officers and lenders are as well. So first off, a forbearance means you're going to temporarily disrupt your payment. They're going to be allowed to temporarily not make a payment. And really who it's for is for people that have no other option. Now, different lenders have different thresholds of what you have to show that you were impacted. But let's just assume you can show you're out of work, or you have work stoppage, or you have a little less income. They're going to be pretty lenient about granting their forbearance. The problem is that if you don't really need it, we're going to discuss what it really means. So let me share my screen real quick and show you all what it means as far as forbearance. So the benefits are a temporary suspension of your payments. So it gives you time to improve your financial situation. It does not negatively impact your score. That's a big deal, because they're saying that we're not going to.
I don't see the screen like I did before. Am I supposed to be?
Yeah, hang on a sec. Let me try to.
Technical difficulties on.
Yeah, let's start that again. Let me share that again. Okay. How about now?
No. Yes, there it is.
Okay. All right. So let me start that over again. So the benefits are you get a temporary suspension of payments. That's benefit number one. Number two, what they're telling us is it does not negatively impact your score. I'm always a little bit sketchy about that, because we went through the housing crisis when I was in this business during the housing crisis, and all those kind of similar programs they put in place. Sometimes they forget, or there's accidents that hit your score, but they're saying they're going to turn off, if you get approved for a forbearance, they automatically turn off the score. So that's good. And then the other thing, you don't have to worry about getting foreclosed upon. So there'll be no foreclosure activity. Just your whole thing gets put on hold. But the big question is what happens when you're done. So number one option is deferred payments are paid in full. Okay, well, that's not good. So let's say your house payment is $2,000 a month and you defer it for 90 days. You now have a lump sum due of $6,000 and your next house payment coming due.
So that's not good for a lot of people. That's a lot.
No, that's a lot. At a time you have very poor cash flow. Now, you can request an extension on the forbearance, but then you're just kicking that same can down the road with an even bigger problem. So I really don't like that idea. The other two options would be, one would be request and receive approval for a repayment plan. And that would be sort of like, if any of you have ever had an escrow shortage, because property taxes went up and your payment goes up, that kind of a thing. If you have not had that happen, what it would be like you pay your regular payment and then plus an additional payment on top of that for a set period of time until you bring current. And they're not going to put it out over 30 years. They're typically going to do like 12 or 24 months. If you're lucky, 24 months. But at least that's better than a lump sum payment. And the last thing is loan modification. That's where they rewrite your loan and they put that forbearance amount into a new loan amount. That process is a nightmare. You have to be late on your mortgage to do that. So that right there is not good for anybody. And then it usually takes, 3, 4, 5 months to get approved. And sometimes you go late and then they don't approve it. I do not recommend a loan mod for anybody. So knowing that these are the facts, here's what I want to say. 80% of Americans are working right now, and jobs are not going to be impacted, for the foreseeable future, probably not at all, right? So that means if you're in that other 20% category where you were impacted, and I know it's not just it's restaurant, it's hospitality, but I see it all day long. Like I have dentists that can't work, orthodontists that can't work. I just have a client right now, he works for Goodyear Tire Factory, and they're on furlough for 90 days. Akron and Goodyear is on furlough for his plant in a different state. He's buying a second home here. So we're using alternative sources of income. So the point is, it's affecting a variety of people. But if you're in that category, then the next level is, okay, I'm in that category, but can I pay? Remember, this is probably a 60 to 90 day event as far as your cash flow. So you don't want to sit there and put a big problem on yourself, potentially jeopardize your credit, and have a huge housing issue for short term. So what I'm recommending, I think you are too, Shannon, is take advantage of this if you have no other alternative. That's when you want to take advantage of it. I know we wanted to talk a little about some other creative ways to help your cash flow.
Absolutely. Another thing that I think some people might know and some people might not know is that your car payment can actually be put to the back of your loan. And I think people were getting that confused. They were thinking your mortgage would do that too.
Right.
So, two totally different things, but it's easier, I think. You can call your car lender.
Yeah.
Yes, I think that's the easier solution and the quicker solution for most people if you have to defer anything. Would you agree?
That's a great point. Let me tell you, not only does it go in the back of your loan, but it brings up 2 points actually. Number one, during this time, if you're listening to this video, make sure you're getting the information you received from the person servicing your loan, whether it's your mortgage company servicer or the servicing customer service department, the auto loan. The reason I say that is because I have calls all day long where people are getting family and friends and others telling them things they heard that are not accurate at all, you know, and they're acting on those beliefs,
you
right?
don't need
So
fake news, do you?
well, it's not done intentionally. It's all in good faith, but it's worth. So make sure you're getting the accurate information. But Shannon's right. These auto loans are easy to defer. They don't hit your credit. They put them on the back of the loan. It's a lot easier for them. It's much less complex than what happens on a mortgage transaction. And then, you know, you can minimum payments on your credit card only. Like in other words, if you had a financial plan saying, hey, I'm trying to pay this amount per month on my credit card, just pay your minimum payments. Don't feel guilty about it, right? If you have doctor's bills that were, you know, where you have a co-insurance or copay, call them up and work something out. You know, make a $50 payment, you know, get a 60-day deferral. Most of them will do that for you right now. You just work with all of your creditors during this time and then focus your attention on the housing payment, because the rest of the stuff will be easy to sort out once this is over.
And I think the best thing to do is to not avoid. If you really will make these phone calls and talk to people, there's always going to be a solution. I know sometimes it just becomes overwhelming and you're like, I've got all this, I've got this, I've got this. And you just kind of ignore it and it's not going to go away. But I think right now people are really willing to work with us.
That's great advice. It's 100% true. You got to call the creditors and also be willing to not get frustrated if, you know, you're on hold for a while, you know, or if whatever online solution they've given you. I know, for example, a lot of people in the first few days of this forbearance last week were given links, you know, like, hey, go here for your forbearance. And there was like, really wasn't answering any of these questions for them, and it was frustrating. So just be patient and work yourself through.
I think it's easier to call like at odd times too. They said for all of this, you might not get any sleep, but pick an odd time to call where you think most people might be sleeping. You might be able to get through.
Yeah, you just got, and you will make it through. And most of them have made it easy online to do. So I think that's some great information we're giving y'all, is just, you know, just do what we just suggested and make sure you make great decisions. And really the housing has to be the last option.
Yeah, you know, and feel free to call myself or Todd. And if you need more answers, I will probably redirect you to Todd, but I'll try to get the answers.
Yeah, and I'm happy to help. Even if we weren't, like, even if you're seeing this and you weren't a client of mine in the past, I'm still happy to help you.
Yeah, absolutely.
You know what I mean? So just feel free to reach out and we'll get back with you as soon as we can.
And I'm ready for a Perry's pork chop. Well, how about you? You ready to go?
Yeah, I sure am. Just something to get outdoors. I mean, other than walking outside, there's not a whole lot we can do.
No. Well, take your dog for, if it would warm up, I could maybe swim in my pool. But
tomorrow, the next 2 days, is supposed to be in the 80s. So hopefully that'll get everybody in a better mood. Okay.
Well, as always, it's a pleasure speaking with you.
Oh, my pleasure's all mine. Thank you so much, Shannon.
Talk to you soon. Bye.
Bye-bye.